Welcome back. Well, as we get closer to the next much anticipated Federal Reserve meeting, I thought it might be helpful to talk about the probabilities. We hear a lot, they'll talk about the fact that when a piece of news is released, a CPI, non-farm payroll, they'll say, well, the odds have shifted. The federal funds now predict a 60% chance of the Federal Reserve raising rates or keeping them the same. So I want to take a quick look at what exactly does this mean. Well, the white line is the S&P 500. This goes back to early April. The red line is the probability, and these contracts, these are actually futures contracts that are traded and followed, by Federal Reserve officials and many financial institutions. And the red line represents the odds, the probability that the Federal Reserve will have rates after this meeting, this next meeting in July, between 5 to 5.25%. The federal interest rates are always in a bracket, 5 to 5.25. The blue line represents the probability that the interest rates will be at 5.25 to 5.50. Now you can see when one line goes up, the other line goes down, because obviously interest rates can only be at one level or another. Right now, the futures contracts indicate approximately a 94% chance that the interest rates will be at 5.25 to 5.50, meaning that they're going to raise rates by a quarter. Right now, we're at 5 to 5.25. Okay, so when did this change? We can see it changed going back to mid-May, around May 23rd. The red line, which represents the chances again that interest rates would be at 5 to 5.25, that plummeted. And during the same period of time, the blue line, the 5.25 to 5.50 prediction, that rose. When one goes down, the other goes up. Now, we have a 94% chance again that will be at the 5.25 to 5.50 range, and only a 6% chance that will be at 5 to 5.25. So 94 plus 6, that's 100%. The white line represents the S&P 500. We're going to talk about the stock market performance in just a moment as it correlates to this shift in the odds. But you may ask, well, what happened on May 23rd, or May 24th actually, which shifted the odds? Well, it wasn't an interest rate decision. We looked at the economic calendar. It wasn't non-farm payrolls or CPI. There were construction numbers, I believe, but that's not big enough to shift the odds. We need some major macroeconomic event that will move the odds from 5 to 5.25 to 5.25 to 5.50. We'll take a look at the following Reuters news that was released on May 24th. And this event actually occurred on May 24th as well. The Fed agrees the need for more rate hikes after the May meeting was less certain. This was reported on Reuters at the time, May 24th. Federal Reserve officials generally agreed last month that the need for further interest rate increases, quote, had become less certain, with several saying that the quarter percentage point hike they approved might be the last, according to minutes of the May 2nd and 3rd meeting that was released on Wednesday. Wednesday is May 24th. See, what happens is the Federal Reserve will meet during their interest rate decision. They'll have a meeting. They'll announce interest rates. And then a few weeks later, they'll release the minutes. The meeting was on May 2nd and 3rd. The minutes were released on May 24th. The minutes of the meeting really allow us to dive very deeply into their wording and to understand exactly what their intentions are. Well, the minutes, and many analysts and hedge funds out there will pour through these minutes looking for any change in the nuance. Well, they said that the need, generally agreed that last month that the need for further interest rate increases had become less certain. So, as a result, the odds shifted. Now, it doesn't require us to become experts on the language of the Federal Reserve. It's much better if we just watch the odds. The odds are very, very simple. Well, this is what the odds look like on going from May 17th through May 29th. The red line represents the odds that the interest rates will be after this next July meeting, 5 to 5.25. They were as high as 81% May 20th, 21st. The green line represents the 5.25 to 550 range. That was at 19%. And we have other contracts at 550 to 575 and the 475 to 5 level. Those were at 0. So let's not pay attention to those. But notice what happened, in particular this crossover. This crossover occurred on May 24th. We actually took a snapshot exactly of the data. This is what the data actually looks like. Look on May 24th. Well, actually the 23rd. 5 to 5.25 was at 58%. 5.25 to 550, 37%. Well, the boldface area of boldface line over here, 524, May 24th, shows us we went 58 to 43%, a drop in the probability that the interest rates would be 5 to 5.25. The 525 to 550 went from 37 up to 45. In fact, the 550 to 575 went from 6 to 12%. So we can see a shift, and graphically it's a lot easier to see. The red line, 5 to 5.25, plummeted. The green line, 5.25, 550, rose. This crossover represents the change on May 24th when the Federal Reserve released their minutes from the May 2nd and 3rd meeting, which indicated that, well, this is what the odds tell us. There's a much better odds, much better chance that the Federal Reserve is going to have rates at 525 to 550. Again, we don't have to be an expert in the language and to really interpret what the nuance is. Just watch the odds. Well, what did the stock market do? Go back to the first charts. The white line is the S&P 500. The red line is a 5, 5.25, and those odds dropped on May 24th. The blue line is 525 to 550. Notice the correlation between the S&P 500 and the 525, 550 odds. The blue line, the white and the blue line. Almost perfect, not perfect, but a very, very strong correlation. When one line went up, the other went up as well. And what this is telling us, maybe, this requires a little bit of us to extrapolate from this, but maybe it's telling us that the market, the stock market, you and I, all the investors and traders out there, believe that if the odds are better for higher interest rates, well, it means, hey, the economy's strong. Or maybe that we're not going to see higher interest rates and, therefore stocks are going to do better. It's up to us to determine that. It's just a guess. But again, follow the odds. When the driving probabilities are at 5 to 5.25 to 550, they start to rise and we see the S&P 500 following suit. We know that's driving the stock market, that shift in the probabilities. Well, fast forward to present day, we have a 94% chance that the Federal Reserve is going to have rates between 5.25 to 550. We'll watch that very closely. That would represent a 25 basis point, quarter point hike. Once this meeting is released, we will then, of course, watch the economic calendar, and we're also going to keep a very close eye on these odds moving forward. Maybe we can catch the next nuance, the next meeting minutes or non-farm payroll, or after every big economic number, we may take a look at these odds. If nothing changes, we won't talk about it. But if there's a significant change, we'll be sure to discuss this because it's very interesting and very, very timely. We hope this has been helpful. We look forward to seeing you back soon.